let's face it, rarely does anything come together on the first try. And by that I mean, when you go in to build your WIP the first time, you're probably going to need adjustments. You take your data from your accounting software, take your reports from Excel for the contract price and estimated total cost, put it all together, and the numbers don't seem to make sense. So you either keep it that way or you do something to address it. Typically, you run through different scenarios to see what could be causing it. I've put together a few different scenarios based off of large overbillings and large underbillings. It's something you guys can keep a lookout for when you're making necessary adjustments to your WIP. So let's get started with the first example, project 1, where we have a large overbilling of $384,000. We've got a $1.2 million contract with total estimated cost of $1 million. Gross profit percentage, 17%. Okay, we get into the activity. We got cost to date of $475,000 and billings to date of $954,000. Based off of contract activity alone, that's 50% gross profit. That's a lot. And since we're recognizing, forget about WIP, just based off of billings and costs, we're recognizing 50% gross profit. That means we've got to trim that back down to match the expected amount, 17%. So as a result, we have a huge overbilling, which, considering where this job is at, roughly 50%, something looks a little unusual. We may need to do some digging. So the first case, what I've seen, and by the way, these are all based off of real examples that I've seen in the field as I've worked through making adjustments on the WIP. So hopefully these will be helpful for you. So the first one, it says additional cost included. Same contract price, same total estimated cost, same billings to date. What we've done here is added a cost. That's $300,000 of cost. I didn't just say, hey, let's add it. This was a cost that was incurred in the current period or the current fiscal year that this WIP reflects, but was paid or recorded afterwards. And then when I say paid, I mean maybe there's some hybrid cash basis approach that you may be using, but it doesn't matter when it's paid. It's when the cost was incurred. If you received a subcontractor invoice in 2024 and we're working on a 2023 WIP and that work was related to 2023, well, that's technically a cost that should be on the schedule. So this $300,000 is actual cost relating to this specific period we're covering. So in this scenario, you add cost, you're going to be reducing your gross profit based off of the billings to date and cost to date, which in turn decreases your overbillings. So just by adding that cost we had left out initially by mistake or error, we've adjusted overbillings to something that's more reasonable. So we've got $24,000 in overbillings. That seems more likely. That's one scenario. So when you have costs that just haven't been recorded, typically an unrecorded liability because you haven't paid it, you would record a payable and the job cost, which would then bump this cost to date up. Okay, that's one scenario. Now let's go to the other. An adjusted estimate. Okay, maybe you didn't exclude an invoice. You had proper cutoff. All the invoices were in as they should be. All the billings were squared away, but your estimate isn't correct. So what can happen sometimes when you're adjusting estimates with overbillings is you're being too conservative. You're saying you're only going to be recognizing a low percentage of gross profit, which is increasing that overbilling. Now, instead of saying 17%, you're really thinking you're going to recognize 41% gross profit. Okay, that 41% is a lot closer to 50 than that 17. So our initial estimate of $1 million was too much. We were being too conservative. We're really going to do well on this job. And we also have our billings and costs to show for it. We're at 50% now, and the actual estimated cost is 41%. Well, making that adjustment just to the estimate gives us $150,000 in overbillings, which again is more palatable than the $384,000. This final scenario involves a combination. So we adjust the estimate and we also adjust the cost. We had some costs, it wasn't $300,000, but we had to add some costs in that weren't properly recorded. Combination of the two, we see that our activity based off of billings and costs is a lot closer than our anticipated gross profit. So that drops our overbillings. So you have to have a legitimate reason to make all these adjustments. I'm not saying, hey, you have a large overbilling. Let's make it go away by decreasing the estimated cost. You have to run through those scenarios and do the research to say, hey, is there something that needs to be changed on the estimate side or the cost side? Are we excluding costs? Am I being too conservative with the estimate? Or there could be some answer in between. But it's worth researching. And again, you can't just change it because it doesn't look good. There needs to be good reasons, and I think you should document those reasons. All right, now let's move on to a different example. This is project number 2. We've got a large underbilling. Okay, different contract price, different total estimated cost. On this job, we're estimating unadjusted numbers, 20% gross profit. We come to our activity. We've got $845,000 in cost and $652,000 in billings, just based off of this activity alone. Negative profit of 30%, or it's a loss. So we've got a huge underbilling of $404,000. This looks strange. Okay, the numbers look skewed. I mean, why are we so far off with our billings and from our estimates? A bunch of questions are raised. So let's go through the same concepts. The first scenario is including an additional billing. So same contract amount, same total estimated cost, same cost to date. But you see here we've increased billings. Now, why would we increase billings? Because we like to and it makes us look better? No. What can happen sometimes is people, they want to keep track of their books on a cash basis, and so they'll go in, or you'll go in and you'll book revenue when the cash is received. Well, that's not going to help you in this scenario when you're trying to put together accrual financials. GAAP, essentially, but to keep it simple, accrual financials, when you recognize revenue when earned and costs when they are incurred. So you've done the work, you billed them, you just didn't record it in your system until you received the cash in the following year. Well, guess what? That belongs in the prior period, in this period we're talking about. So you bump up your billings to date. These are legitimate billings we're adding that were incorrectly recorded in the subsequent period. So by doing that, we bump up the activity, the gross profit based off of contract activity to 13%, a lot closer to this estimated 20%, which drops the underbilling substantially to $86,000. All right, that seems more reasonable. Now we go to the second scenario where we make adjustments to the estimate. There's a change in the contract amount. We've got some negative change orders or deducts, and we've got to increase price. Unexpected hardships are faced. We've got to do extra work, more demolition than expected, longer time frame. So we go from 20% gross profit to 3%. Same cost to date. I've changed the billings to date here. Well, sorry, the billings to date are just match our first example here, $652,000. That drops our underbillings to $219,000. Okay, see, we were at a gross loss here at 30%. We're at a gross loss here of 30% too, but the margin is so much lower that it's not that far off, right? 3% from negative 30 is closer than 20% to negative 30. So we still have a large underbilling, but it's a little more palatable again. Now we go to the final scenario where we have the additional billing and adjusted estimate. So we have our adjusted estimates here, we have our cost to date, and now we have more billings similar to this additional billing one. And we're up at 13% gross profit. Now we have an overbilling, which $98,000 in overbillings on a $2.6 million contract seems to make a little more sense. What we did here is just go over different scenarios and chisel away at what could be off. And it's not that easy in real life, I know, but you have to run through and ask yourself these questions. When you see a large overbilling, typically you think there's some costs missing, all right? Because a lot of people record invoices when they receive them, not necessarily when they're incurred. So that's something to keep in mind. That's going to skew your overbillings. On the underbilling side, you could be recording receipts, cash receipts as your billings. And if you're doing that, you may be increasing this underbilling because you're obviously your gross profit isn't where it needs to be. So you need to ask all these questions to identify what needs to be adjusted. I mean, underbillings are scary. They help your revenue, but if you have a really large underbilling and there's nothing that needs to be adjusted, what that means is some of these costs won't be recouped. That this large underbilling is masking a future loss. And that's not a good scenario. We don't want to see a ballooning underbilling because that's just deferring this revenue recognition until there's nowhere else to go but a loss. It just reverses revenue. It decreases it. So that's something to keep in mind. Overbillings, it does decrease revenue, but you typically would like to be overbilled, right? I mean, you want the cash and accounts receivable. You want that cash to complete the project. So it's not as big of a deal, but that needs to be addressed as well. You have to take it contract by contract, GC to GC, job by job, depending on who you're working for. If you're working for your Department of Transportation, and you've got a site engineer, you are likely not to be too overbilled. Or if you're just starting out, you may have a lot of overbillings for your mobilization. There's just so many scenarios. These are just a few. But the idea here is to get you to think about where something could have gone wrong. That's the idea. Where could you potentially need an adjustment? Is it to the activity or is it to the estimate or both? So I hope that was helpful. Please leave a comment below or question below if you have any. Thanks again for tuning in. I'll see you in the next lesson.